What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options trading course. And so what we're going to talk about right now is how we're going to play Tesla in the options market. So this is going to be a really good video for options traders and people that kind of want to just get my perspective and my analysis on how I'm looking at this Tesla situation and how I'm going to enter and exit this situation to try to drive some revenue into my options trading, right? Leveraging what I understand about Tesla and what I understand about market sentiment surrounding Tesla. So I want to give a disclaimer really fast. This is not investment advice. I'm not a financial counselor or advisor. I don't have a Series 7. You should use this particular video as information, education, and also entertainment, right? But don't take this as investment advice or counsel on how you should proceed in this particular market. I'm talking about my own personal perspective, and it should not have any influence on how you choose to go about things in the markets, right? So we understand that currently right now, let's get some context. Tesla's going to do, I believe, a 5-to-1 split, right? So however many shares that you have of Tesla, that's going to be broken down into 5 shares, I believe, right? So you're going to have less. The value of your shares is going to be less, but I believe that your equity is going to be the same. Tesla doesn't pay a dividend, so you don't have to worry about that. But we're going to do a split. Now, there's reasons for this particular split. One of the reasons is because a lot of people believe that they want to make it more attractive to people to get in, because Tesla right now, I think currently is around $16.21. So that's around $1,621. And they think that particular barrier is creating a high emotional barrier, right, to people getting in on Tesla. What's going on, Levon? What's going on, Wanda? If you could you like the video? Help me get that algorithm boost. So they believe that that particular price point is a psychological barrier to get people from getting in. So what's going to help more people buy Tesla, right, is that they're going to split it, okay? So they're going to split it. It's going to make the shares less expensive. Another reason why is that Tesla is getting ready to start becoming indexed by a lot of funds. And one of the things that if you look about Tesla, when you watch it, it's a very volatile stock. So I've watched Tesla. I've been watching Tesla, I want to say going on probably almost 60 days. And I've seen situations in which Tesla would do a $100 run up in 30 minutes, right? Then it'll drop down another $40 and it'll go back up like another $60. It's a very volatile stock. Well, because of the price point and the volatility, a lot of the fund managers don't want that kind of stock, right, inside their fund. So what the stock split is going to do is it's going to increase the size of shares. It's going to increase the float, and it's going to make this stock a lot less volatile, right? So what we're used to for people that were trading Tesla, we're used to a very volatile stock, all right? It just moves. It has these big swings. It's almost like I look at it like a really big wave out there in Hawaii. And if you ever seen those big waves out in Hawaii, they have a swell of 12, 13 feet. Those waves can be very dangerous. They can kill you if you try to surf them and you don't really know what you're doing. Right? They're that dangerous. But at the same time, because the wave is so powerful, it creates a great environment for people that desire to surf. So that's how I see Tesla, right? As this really big wave that crashes into the beach. And if you mismanage it and you don't handle it properly, it can mess around and kill you, right? Well, the index managers don't want that kind of stock inside their index. So what they're looking for is something that's a lot less valuable. So with this stock split, it's going to increase the amount of shares, and what it's going to allow to do is going to take a lot of that volatility out of Tesla. But this is how we're going to play it. To me, what this is going to do, right, and I'm talking about market sentiment, not fundamentals, is I believe that a lot of people, right, have had a desire to own Tesla before it splits. Because their concern is that when it splits, right, I can buy now, get to 5-to-1 split, right? But if I wait till it splits, I'm worried about it running up very fast. And then I won't be able to buy 5 shares individually, right? Because I may be paying 800 times 5, right? So I think 8 times 5 is what? 8 times 4 is 32. So 8 times 5 is 40. So you'll be paying what? 4,000. So they may be worried about that, right? So they're worried about once I get to split, it's going to run up really fast. So it's less expensive for me to get in right now at the $1,600 mark, right? So I believe that there was going to be a run up. So what we did earlier this week is we played Tesla for the run up. So we believe it's going to run up. Some people think it's going to hit 1,700. I personally think if it doesn't hit 1,700, they're going to pin it around 1,600 until it splits. So I think if it doesn't hit 1,700 by tomorrow, They're going to probably pin it in the $1,600 mark, and it'll probably stay there until it splits. And I believe it splits on the 28th, right? So I believe that it was going to be a run up. So we played it for the run up, and we were able to capitalize off that situation. But what I also believe is that once it splits, right? Let's say it splits and it ends up around, let's say $500 per share. I believe you're going to get another run up because they're going to be going into Battery Day. And Battery Day is September 22nd. That's still the tentative date because with all this COVID situation, you don't necessarily know because it's going to be a live event. They're not going to do a virtual event. They plan on doing a live event. So it'll be in a live event, and when this COVID situation, you don't know if they're still going to be able to do an event, but let's just assume they will be able to do the event. I believe once it splits, when it's supposed to split on August 28th, what you're going to see is it's going to also start walking itself back up and approaching Battery Day. So my goal was to play it for the run up towards a split for all the people that want to get in because they're worried about once it's split, it's going to run up again and they're going to have to buy each individual share, and it would be less expensive for them to buy now at the $1,700 mark. Then once it splits, right, it's going to start walking its way back up again as it approaches Battery Day. So my goal was to hit it from both sides, play it now and then play it a little bit later. So I already made my play earlier. I think I got in Wednesday. I exited this morning, right? I doubt I go back in. Okay. But you never know if I get the right opportunity I may, but I doubt I go back in and play it again. Then what I'm going to do is I'm going to wait for it to split. I'm going to see where it's going to split at. And then I'm going to look for call options going out around that Battery Day. I think we got some mid-September dates that we can go into, and maybe even a date after that. Because I believe with the split, the news about Battery Day and the anticipation is not going to be what we call baked in. What I mean by baked in, what I mean is that all the euphoria is already currently in the price of the stock. So when it approaches that event that you think is going to move that share price, it doesn't really move it, right? So what I believe is that the euphoria around Battery Day, it will not be baked in. But what I want to do is, as soon as it splits, right, start looking at call options going out to take advantage of any forward momentum. And then if I do think it's baked in, I can go ahead and get out. Because what I really want to see is that what does their options market look like after the split? Tesla has been such a bullish stock for so long. I don't remember what their options market looks like when it was under $1,000. So I want to see if it hits $500, $600. What does that market look like now? And then how do I need to position myself, right, to try to play that run up to Battery Day? Then they also got another earnings coming. I want to say maybe October. So we have multiple opportunities, right, to take advantage of this new price, and hopefully some of the options market can go down a little bit because right now the options are really crazy for Tesla. And so it'll allow more people to get in. So everybody's going to make more money by them just cutting some of the top off this particular stock. So that's how we're looking at playing Tesla. This is 100% a market sentiment play. What I mean by market sentiment is we're 100% playing this off the emotion of the market, the euphoria of the market, the anticipation of the market, how a lot of people feel like they're going to miss out if they're not in on this situation. This has nothing to do with the balance sheet, has nothing to do with fundamentals. Tesla's not that kind of stock. And if you try to play it that way, you're going to be very confused because at the current price point, there's nothing inside the company, right? From a balance sheet standpoint, right? From a revenue standpoint, from delivery standpoint, that can actually support their price point, right? They're a larger company right now, I think, than Toyota based on market cap. Well, they don't even deliver probably 1/10 of the amount of cars that Toyota delivers worldwide. So you really got to understand that. So you got to start looking at this from a different perspective. How do you evaluate the emotion of the market, right? And their desire to be involved in this situation. And then how can you as a trader capitalize on that, right? And that's really where you're going to start to see the profitability, as opposed to trying to figure out, well, I can't figure out this price point because it's not hinged to anything that's tangible inside the company. So that's how we're going to play Tesla. I want to repeat to you, this is not investment advice. This is just my own personal perspective. And it may change, and it will change as the market changes, because I'm just going to adapt to whatever's going on. So if you got any questions, hit me up. If you want to understand and get a little bit more information about the highest paid part-time job in the world options trading course, reach out to me one-on-one. We got the automated course. We also got the one-on-one series. We also got the Facebook group in which we have these kind of conversations on a regular basis. This is David W. Williams, also known as Diamond Dave. Hit me up in the comments. Share the video out. I'll talk to you later.